I'm going to hand it over to Leif. He's got his video up. He is the founder of Frey for Men, and I'll let him take it away.
Hey everyone. So again, thank you very much, Ken. My name is Leif. I'm the founder of Frey, a direct-to-consumer line of clothing care products tailored towards men. Men's clothing, men as a whole are paying more and more attention to the details surrounding their scent, their appearance, their fragrance, and again, their clothing. The menswear industry as a whole has absolutely been booming. It's at a $402 billion valuation globally. This has outgrown women's wear for the last 5 years and is projected to continue to do so. And again, as I just touched on, men are doing more and more laundry. Yet, despite these two massive emerging trends, the existing laundry and clothing care markets are totally missing this demographic. Most products are still tailored towards women using outdated formulations and oversized, brightly colored jugs. And also the two giants in the industry that have been running business the last many decades have been doing business the exact same way for years. And that's in supermarkets, not this direct-to-consumer tech-enabled platform. So again, just a few examples of very much the advertisements tailored towards a specific segment of the market, missing single men. And this is us. This is Frey Clothing Care, again, a direct-to-consumer elevated clothing care line, blending this emerging trend in menswear and men doing more laundry with this outdated market. Again, we are a tech-enabled platform, which has allowed us to grow and pivot much more quickly than any of the existing brands. We are bringing fashion to an industry that has not really seen it before. 65% of our customers are more excited to do laundry, which we feel is a huge statement to what we're bringing to the market. Again, we're improving on existing products, including the formulations, the bottle designs, our various value propositions, and again, capturing this massive shift in male consumer behavior. So just a little bit about our previous traction. We have not raised money to this point, so all of this is on a marketing budget of less than $60,000. We've seen 25% month-over-month growth for the last 5 months. We broke $23,000 for October. We're projected to do $30,000 for November. Our margins after our most recent PO will be at 60% post-shipping, around 80% pre-shipping. This is one of the highest in the industry. Procter & Gamble sits at around 50% gross margins. We've sold over 20,000 products and washed over an estimated 1 million garments. On top of this, we've also been recognized by some of the world's leading publications, including GQ. We are partnered with Saks Fifth Avenue. We're actually being sold in their online store. So again, a huge testament to what we're bringing to the industry. Saks Fifth Avenue would never normally sell laundry detergent. We partner with Paramount Pictures. We've been on Good Morning America, the BBC News, ABC, and a number of other publications. Our metrics are incredibly fantastic. So we're really excited about this, again, especially now that our margins have hit 60%. With our blended customer acquisition costs, we're making money on the first purchase. Clearly, this is massive potential where theoretically, if you give us $100,000 in marketing, we're immediately turning a profit on that. Again, our product is differentiated in the fact that we are first to market. We are incorporating a much classier fragrance. We've worked with the top fragrance houses in the world to create a cologne-inspired fragrance. We've improved on the formulations. We also are B Corp certified, again, something that our customers attest to and willing to purchase for. However, our higher competitive edge is not what we've done to the products, but again, the fact that we're a tech-enabled platform. We're bringing a subscription direct-to-consumer model to an industry that's never experienced that. With this, we own our entire customer experience as well as all of our customer data. This has been fantastically useful for pivot after pivot after pivot, where we can improve with every single purchase order. The reason why companies like Dollar Shave Club and Harry's are able to beat Gillette is that they own the consumer data. So on every purchase order, they're reiterating a tiny bit to make a better product. And we're following that business model. Speaking of Dollar Shave Club, we're actually in talks with Unilever. We've spoken with them over half a dozen times. We have an NDA in place. We've spoken to their venture capital arm. I want to be clear, there's no near partnership. But again, to have a massive corporation reach out to us and give us guidelines and milestones to work towards is a huge testament to what we're doing in the industry. Just a little bit more about our marketing spend. Again, our metrics are fantastic. Over the course of our lifetime, we're averaging close to a 5-to-1 revenue versus marketing dollars. We're doing this primarily through digital ads, but also through partnerships with brands such as Esquire, Cool Material, and Thrillist. So over the month of November, we're partnering with those 3 brands that I just mentioned to collect over 150,000 emails within our target demographic. We're sitting at a list size of about 40,000 right now. So that gives you an idea of how much we're escalating our marketing as well as our traction. Again, a few projections. The thing about our projections is that we have almost 2 years of sales history. So unlike some startups where you're just connecting two dots and telling an investor that, hey, we're going to hit 5 million in the next 6 months, this is based on very accurate data and what we hope are conservative projections. It has us hitting over 5 million for 2019 with a run rate of over 5 million by the middle of 2019. A little bit more about our team. So I co-founded this with my brother. I graduated Georgetown University with a degree in economics, mathematics, and business administration minors. Worked as an independent e-commerce consultant right out of school. So that gave me a lot of material and experience to build what we're doing today. My brother was a neuroscience and pre-med major at Dartmouth. So he's handled the chemistry side of all of this, working with our head of research and development, as well as the others, to create these products. And our team of experts to support our supply chain have been absolutely fantastic, where any experience or knowledge that we may lack, they've been able to more than compensate for. So again, just touching on a few of the points that I just went over again, we're projected to do over 5.5 million. That's based on very strong, very strong numbers in terms of our return on marketing, our margins, and we've already been recognized by some of the world's leading publications and brands. So we're excited about what's to come. I appreciate you listening. And Al, I'm looking forward to what you have for me.
So what's the frequency of purchase you're finding with the average customer, and how much are they spending in each purchase?
Average basket is at 37 right now. That will be around 42 in 4 weeks' time. We're launching a fabric softener. Average frequency sits between 2 and 2.5 months.
So is it an automatic reorder, or do they have to actually reorder?
It's both. So following again the Harry's Footsteps model, where you can both sign up for a subscription, which we clearly push most of our customers towards with various discounts and free shipping, or you can do one-off purchases. And we've actually, again, one of the numbers I kind of skipped over is that we have a 55% customer repurchase rate for first purchasers. And then once they've purchased the second time, that jumps to over 70%. So again, strong retention rates here, coupled with the fact that we're making money on our first order.
So 2 more quick questions.
Please.
So that you show a significant increase sometime mid next year. What's the impetus of that? Why all of a sudden are you going to increase that great?
In terms of our revenue?
Your projection, yeah.
Right. So we're raising money right now. Up until this point, we've been running it as a business where money from October, the profit from October goes into our marketing budget for November, which means that it's been a slow snowball. We're raising money right now. We have a soft commitment from 3 different angels and an angel group already. Most of our raise will go straight towards marketing because, again, we're making enough money where we can basically handle the purchase orders on our own.
So your production and then logistical network is going to be able to support that?
Absolutely. No, the experts that we're working with handle hundreds of thousands of units a month. So we'll be absolutely fine.
Very good. Nice job.
Thank you very much, Al.
Leif, this is Ken. Would you go ahead and underline us your current deal for the investors out there who are listening? So what have you raised? What are you looking to raise?
So still looking for a lead investor. It will be convertible note. We're looking at $750,000. Working on those terms, again, based on the lead investor. Have a soft commitment of around $200,000 already. Again, just waiting for a lead to come in. We have phone calls lined up the next 2 weeks with all potentials.
Okay. All right. Sounds great.
Thank you very much.
Thank you very much, Leif.